Time for the 360 round, all about electric vehicles, because we've had some reports, some are due to report, and Tesla's always in the news.
There, Tesla's got to convince the market that they're more than a car company, they're a technology company. And to do that, they're going to have to come up with some pretty striking news on October 10th when they bring out the next version of full self-driving. I think they can do it. We'll see. The big challenge there is Waymo already has regulatory approvals in San Francisco, Los Angeles, Phoenix. They already have full self-driving cars on the road. The regulators have approved. Tesla's got to get over that hurdle. We'll see. What they might do is announce they have regulatory approval in China and they're starting there, the world's largest auto market. That might be a bump for the stock, but they've got to produce, and I've got my fingers crossed. We'll see.
Since Tesla is always in the news and we have several studies that are due, it's time for the 360-degree round, which will focus entirely on electric vehicles. Tesla needs to persuade the public that they are a technological firm rather than just an automaker. And when they release the next iteration of fully autonomous driving on October 10th, they will need to make some very shocking announcements in order to accomplish that. I believe they can succeed. Let's see. The main obstacle is that Waymo already has regulatory approvals in Phoenix, Los Angeles, and San Francisco. Fully autonomous vehicles are already on the road. The authorities have given their approval. Tesla must overcome that obstacle. Let's see. They might declare that they have regulatory approval in China, the largest auto market in the world, and that they are beginning there. They must produce, even though that could hurt the stock. And I'm crossing my fingers. Let's see. Rivian and Lucid are struggling as Tesla continues to lead with its innovative technologies and skyrocketing stock values. We'll explore the difficulties these businesses encounter, the survival tactics they're using, and how Tesla continues to play a significant role in the rapidly changing EV market in this episode. We'll go into great detail on Rivian's financial difficulties in spite of their optimistic plans and Lucid's sharp reduction in production projections. We'll also look at how Tesla's research into humanoid robots and autonomy developments could increase their market dominance. As we analyze these advancements and speculate about their implications for the future of electric vehicles, fasten your seatbelt. This episode has something to offer everyone, whether they are tech enthusiasts, investors, or simply interested in the workings of this competitive sector. To ensure that you never miss any of our in-depth updates and analysis here at Tesla Stock News, make sure you have notifications enabled and are subscribed. Let's get started. To start with, Tesla is dominating the EV market. They are taking the lead and demonstrating the process to everyone. On the other hand, we have Lucid Motors. Every 3 months, they lose about $1 billion. That's a significant amount of money wasted. Over there, they're rushing to keep the lights on. It doesn't appear to be looking good for Rivian either. They are essentially in a precarious situation and are depending on Volkswagen to provide them with a cool billion. Rivian still has a chance to stay in spite of the difficult times. Although they have some well-known supporters, let's face it, it's like being the younger sibling that is constantly begging for a favor. Even if Volkswagen has joined the ranks of Rivian's supporters, Rivian is still not in a strong position. They appear to be losing control, which means they may need to make some difficult decisions with a less than ideal cash position. Furthermore, it's a tough hill to climb to take on a powerhouse like Tesla. Time will tell how this underdog story plays out, but they are under a lot of pressure to produce. In sharp contrast to Tesla's present dominance in the EV market, Rivian and Lucid are in the trenches, overcoming formidable obstacles. Let's dissect their problems and examine how these advancements could help Tesla. Despite strong support from Saudi investors, Lucid Motors is currently in a difficult situation. With barely 2,400 automobiles produced in the second quarter, they are losing almost $2.5 billion a year, and the numbers simply do not add up to profitability. Lucid must drastically increase its manufacturing rates in order to reverse the situation. However, scaling up requires time, resources, and reliable operational procedures, all of which they are obviously having trouble with. It's not a switch you can turn overnight. Lucid's credibility was also severely damaged when they were forced to substantially cut their vehicle delivery forecast. They have now lowered their initial ambitious target of 90,000 automobiles by 2024 to only 9,000. This drastic change casts doubt on their stability and long-term viability, raises concerns about their ability to accomplish goals, and may further erode investor trust. Turning to Rivian, they are facing their own set of difficulties, primarily related to their high production costs. Their finances are strained since the cost of producing each Rivian vehicle is far more than anticipated. The recent ratification of a multi-billion-dollar contract with Volkswagen, however, offers a bright spot as it may provide much-needed funding and experience to their operations. Rivian may be able to save expenses and streamline their production process with this agreement. Now let's examine how Tesla gains from all of this chaos. Tesla has effectively scaled up manufacturing already and is still innovating in cost control and product development. As a result of Rivian and Lucid's difficulties, Tesla is able to position with less immediate competition. Customers, both current and potential, may see Tesla as a more dependable option than firms like Rivian, which is struggling with cost concerns, or Lucid, which is cutting production projections. Due to its well-established track record of fulfilling production targets and continuously producing high-quality cars, Tesla may be able to draw in investors and consumers who are growing disenchanted with the more recent competitors. Better terms with suppliers and more advantageous market conditions may result from this as well, since Tesla may be able to take advantage of other people's mistakes to bargain for better terms or recruit talent from these businesses. Being in the shadow of Tesla, a market leader, is making Rivian's ascent in the electric vehicle market extremely difficult. After over 10 years of development and expansion, Tesla has raised the bar for the sector. Rivian, which is still in its infancy, has a long way to go before it can match Tesla's operational scale. Reaching this scale requires more than just producing more cars. It also requires doing so economically and efficiently, two challenges Rivian is now facing. Furthermore, Rivian needs to not just catch up to, but also develop alongside a monster that keeps moving the goalposts, because Tesla isn't sitting on its laurels and is advancing with new production methods. The focus should now shift to Tesla. Their dominance in the electric vehicle market is widely known, but what's really drawing attention are their ambitions for the future. Tesla is actively pursuing autonomy and is even venturing into the creation of humanoid robots in addition to electric vehicles. This is a potential revolution in the way we use technology on a daily basis, not just an extension of their product range. Discussions concerning Rivian and Lucid's future, including conjectures of possible acquisitions, are sparked by the difficulties they are currently facing. They may become desirable targets for acquisition if they are unable to stabilize and scale their business, not necessarily by Tesla, but rather by other firms looking to rapidly increase their presence in the EV industry. These difficulties among the entrants may present chances for Tesla. Tesla is evolving into a tech powerhouse, not just an automaker, thanks to its developments in autonomous technology and research into humanoid robotics. As Rivian and Lucid work through their difficult times, Tesla's persistent efforts to innovate could close the gap even more and strengthen their position as the market leader. From conception to manufacturing, the story of Tesla's Cybertruck is one of inventiveness and perseverance. Since the Cybertruck isn't just another model from Tesla's current lineup, its gradual ramp-up was mostly expected. With innovations like steer-by-wire and a higher voltage system, this truck is a beast unto itself. These are not only little improvements, rather, they are fundamental adjustments that completely alter the way the car functions, requiring a methodical and careful approach to manufacturing. Viral videos that highlight the Cybertruck's distinctive characteristics and strong performance have been going viral online, which has increased the buzz. You can tell a car is making waves in popular culture in addition to drawing attention on the road when prominent people like Donald Trump and Tucker Carlson endorse it. This type of endorsement increases the enthusiasm and expands the audience, reaching a wider audience that is interested in innovation rather than simply tech or auto aficionados. Tesla has a crew that has produced 6 million cars to date. As a result, the Tesla fleet is actually growing significantly. After all, by the end of this year, there will be more than 7 million vehicles. Thus, our Fremont plant is currently North America's largest auto manufacturing in terms of volume. Additionally, we surpassed the previous production record from the NUMI era. In fact, it's quite crazy. In the San Francisco Bay Area, we have a massive auto plant. It's not exactly the most affordable location for an automobile factory. You know, it's like that in the Swiss Alps. However, we were still able to. Please let me know if you require any other help.